Hi guys, welcome back to another session. Today we are basically going to look at the beginner course. This is because we had complaints from most of you who never got to attend the previous class. So so we begin. Just a minute. Let me share my screen with you guys. Okay. Just a minute. So guys, welcome back to this session. Today we are basically going to look at the beginner course for those who really want to start, maybe get a hint on Forex trading so that they begin their Forex journey. I believe this is the right video for you. So feel encouraged and feel motivated. Once you finish this video, you'll be able to get your facts right about Forex trading. So you decide whether you want to invest or not. We already did a video on MT4, which is on YouTube. So this one too, we're going to place on YouTube. So you can always follow up on our videos until that part where you can download yourself a MT4 and open yourself a live or demo account. So just so we begin because of time, Forex Basics 101. So the major question when it comes to Forex is basically what is Forex? That is the most important thing that anyone will always want to know before any other thing, before even the profits or anything else. So you need to be able to explain what Forex is. So Forex is basically the largest market in the world. It's one in which a nation's currency is traded at a exchange rate between two currencies. That's a comparison between the exchange rate of two countries. It has an average of 5 trillion US dollars each and every day circulating the market. So that shows you how much liquidity there is in the markets, or flexibility there is in the markets. So you can always make a lot of money in these markets. The markets are usually open 24 hours, 5 days a week. Yeah, so that's basically Forex. So when you explain Forex, you need to know that it's the largest market in the world. It has up to 5 trillion US dollars. And it's based on currency exchange rate between two currencies of different countries. And they're open 24 hours, 5 days a week. That is Monday to Friday, in exception of public holidays. What you trade in the market is a currency pair exchange rate between two currencies. The major currencies being currency pair being Euro USD, which is our example. So what is an instrument? This refers to a single currency, such as Euro, Yen, USD singularly. But when they're combined into two, that's now what we refer to as a currency pair. So the currency pair is a combination of two currencies, e.g. Euro and USD, which gives us Euro USD, GBP and Yen, which gives us GBP Yen, Euro and Yen, which gives us Euro Yen, or Euro and USD, which gives us, like that. So we have what's called base and counter currency. So base is what we usually look at. It is always the pair on the left side. E.g. in the currency Euro USD, the Euro is the base currency. It's on the left side, of course. And the quote is the pair that is always on the right side. In the currency Euro USD, the USD therefore is the quote. Euro is the base. So in this situation, if you buy Euro USD, you'll be prospecting or projecting that Euro will be stronger than USD. So when you buy, it's the base currency that we look at. The base currency is the pair on the left side. So when we are buying Euro USD, we are looking at Euro. So we are saying that Euro will be stronger than the USD. If you sell, you'll be projecting that or prospecting that Euro will be weaker than USD. So in the first situation, if you're buying and you're prospecting that Euro will be stronger, it means that USD will do weaker than the Euro. That's why you buy. And when you're selling, you'll be prospecting that Euro will be weaker, hence making the USD stronger. So that's why you sell. You come to understand that during the analysis class, which is the next class, I'm going to show you how to look at currency strength meters so that you can decide on which trades to take. So what are some of the advantages of Forex trading? With Forex trading, there's a lot of advantage. First being leverage. Leverage is more of a loan given by the broker you trade with. For instance, we say a leverage of 1 to 200 means that for every dollar you deposit to your broker, you're given $200. Who wouldn't want that? So imagine you deposit $10 and you have like $2,000 loan, or you deposit $100 and you have like 20,000 US dollars to trade with. Most brokers give up to 1 to 1,000. Sorry about that. That's the MT4 platform. So this is what makes Forex the best compared to other securities. With Forex, another advantage is that there's minimal investment. Many trading accounts can be opened with less than 200 USD, of which we have brokers who can even allow you to open with a minimum of like $5, 5 USD. I remember last week when the news came out on GBP pair, if you notice, there was high volatility. I have a friend that we're working with, one of our ambassadors, who just deposited 5K, and by the end of the day, it was at 7,000. So he made like 2,000. He made like 2,000 shillings or 20 US dollars just because he got the news right, and he deposited little money because he didn't have enough money to trade with. At least at the end of the day, he got his 2,000. So with Forex, again, there's no employees, office, or inventory. You can decide to work from your home, just like we do over here. We work from our home offices, and you see we can connect all around the world. We can still give you our signals, and etc. So with 24 hours market flexibility, which means you can do it from anywhere in the world, or still plan your daily trading routine around your job. Yeah. So with Forex, you can always, once you have your computer or your gadget, there's the MT4 for Android, there's the MT4 for iPhone. So you can always trade even from your phone. Once you have your facts right, the take profits, the stop losses, you can always trade from anywhere in the world. Don't panic. It's not like the 9 to 5 jobs. With the 9 to 5 jobs, maybe you're told you're traveling, or maybe you have to go somewhere, and then you find that now you have to check off from work. With this one, no, you can always trade even when they're still working. Whether you're still working at a computer in the office, you can always have a notification. Maybe if you get the signal, you put it, and maybe put your stop losses and take profits for automation. With Forex, you can always generate consistent profit depending on your patience, consistency with your trades, and your analysis. There's instant deposits and withdrawals. With brokers, like right now in Kenya, we have brokers with M-Pesa. So these brokers, you deposit maybe on M-Pesa and it reflects on the account immediately, and you withdraw and you'll see a pop-up message for M-Pesa immediately. There's high volatility. The markets move so regularly, hence making money is easy. Reason being that so many people worldwide participate in trading the markets. Right now, we have like, in every country, you'll always find their Forex traders. In Kenya, it has not become so much a thing compared to South Africa. South Africa, you can notice that there's the minor currencies such as the US ZAR. The ZAR is for the South African rand. So the volatility, that's more of the liquidity that I was talking about. Because so many people are active in the banks, we have prime banks, we have institution traders, we have retail traders, which is us. And the markets, again, they're open 24 hours, 5 days a week, Monday to Friday. It's more of the 9 to 5 jobs. So on weekends, you get to have a holiday before you can get back to the markets on Monday or Sunday midnight. Minimal time commitment. There's 3 to 6 hours a day, which is the maximum you can always commit yourself to. Personally, I always do analysis for like 2 or 3 hours, and then I can go maybe run my errands in the CBD or wherever it is. I have to go run errands or maybe do some classes on one-on-one. So the difference between Forex and stock markets is basically Forex, just like we said, 5 trillion US dollars. With stocks, there's only 500 billion US dollars. So you see the difference, it's quite big. The difference is quite big, more than 5 times what we trade. Opening time, stock markets open 12 hours a day, while Forex opens 24 hours a day. The leverage in Forex is not compared to the leverage in stocks. In short, stock relies on Forex, while Forex relies on global, technical, and fundamentals. So what is a pip? A pip is the percentage in point, the smallest fraction used to measure market movements. just so I can share with you. Just a minute. So if you want to calculate your PIP, we have this part which is called the crosshair. So this is the MT4 platform. Don't panic. You can look at the video that we did recently on YouTube, so you can understand how the MT4 platform operates. I showed everything in details, the nitty-gritties. So let's say from this point to this point, how many pips are those? You can see the two. The first two is the number of candles that we've covered. And then the 98.3, that's now the 98 is the number of pips. The 3 is the fractional unit. And then the 1.361618, that's the current market price. Yeah, the point at which we are at. So you can see that's 98 pips. Let's see another one. Another example, let's say you bought from this point. We want to calculate how many pips you've made. So that's already 71 pips. We've covered 24 pips and they're giving us 72 pips. So you can see the difference. With this one, it's 24 pips and they're giving us 72 pips. With this, it's only like how many pips? It's only like 1 or 2. Yeah, 1. And it's already giving us 118 pips. So that shows you how much the market's moved. That was the trader was basically talking about. So that's the pip. So let's go back to our PowerPoint. Yeah, so for the generic trading value sizes, when you trade in the market, we normally trade with lot sizes. In stocks, you buy X amount of shares. While in Forex, we have like 1 micro lot, which refers to $1,000 of your money, 1 mini lot, which refers to $10,000 of your money, and 1 standard lot, which refers to $100,000 of your money. This is why leverage is so important. So if you open a leverage of 1 to 200 and deposit $100, that means $100 times the 200 loan which you're given, that gives you like $20,000 purchase power. So with the trading, generic trading value sizes, we'll still look at it. Yeah, at a better angle. I'll always be doing several videos, so you can always follow up on YouTube. That's why you have to subscribe to our YouTube to get all the insightful information that we give outside there. So the rules in Forex is 1, never predict the markets. No one knows the direction of the markets. There's a lot that entails the movement of the markets. We have the banks, we have the news, we have the technicals. So never predict the markets. Get your facts right and take a good trade with a higher probability that you're going to make a profit. Of course, you don't want to make losses. So that's why you have to cut your losses after 10%. So never be emotional when trading Forex. You have to be consistent. Analyze the markets, both technical and fundamental analysis, which I'll be showing you guys when we're doing analysis in the next video. So be very eager to watch that because you'll gain a lot. You'll be able to even take your own trades from what I'll show you with the fundamentals and the technicals analysis in the next video. So the types of market analysis, we have the technical analyst. The technical analyst is the type of analyst who uses a series of indicators to make decisions, e.g. stochastics, moving average, Fibonacci levels. Yeah, we have a lot of indicators, almost 300 plus indicators in the markets, which are offered by brokers. So we'll look at that also in the next class. So just understand this. And the fundamental analyst is the analyst who uses news to trade the markets. Normally we refer to this trader as funnels. News such as the NFP, which is the non-farm payroll, which came out on last Friday. It comes on every first Friday of the month. So maybe you can always watch Bloomberg, any news, maybe Forex Factory to find the NFP and get a forum on what people are saying. We have interest rates, we have employment rates, we have GDP. GDP are basically the percentage numbers released by the government that gauges the economy of a country. If GDP are high, it shows you the economy of the country is good. So maybe you're trading on GBP US dollar and you compare the GDP of the two countries and you find that maybe the GBP is doing well, then you can buy compared to once you combine your technicals and fundamentals. So the hierarchy in the Forex market. So who trades the markets? We have the prime bank, such as the Citibank. We have the prime of prime bank, Saxo Bank. We have the liquidity providers such as CHF. We have brokers such as them, like SEM. They trade a lot of money because they get a lot of money from us when we deposit from this spreads and all that. We have the institution traders, such as the banks. We have such as Standard Chartered, the Mansa X. Yeah, the fund management, something of the sort. So they also trade. We have retail traders, those trading less than 100 million. So that's the category that we belong into. With your 10,000 account, so you belong under the retail trader. So the best currencies to trade in the market are the GBP, USD, Euro, and the Yen. Of course, those are the major ones. What moves the markets? We have central banks, which determine the direction of the markets. It's a Federal Reserve System, European Central Bank, Bank of England, Bank of Japan. So you notice that the market movers, they're mostly the banks. So that's why one time, maybe when you are a Forex trader, you go to maybe a seminar or a forum, you'll realize that some people say we trade like the big boys. What they basically mean is they follow the banks. They trade like the banks. They do what the banks are doing. They get their facts right, their research right, and then they trade like the banks. Some best pairs to trade: Euro USD, which is the major traded pair in the world. Of course, this is one of the biggest pairs considering the Euro economy and the USD. We have USD Yen, we have GBP USD, we have GBP Yen, and we have USD CAD. So with these currencies, you can all these pairs, you can always check on them and make sure that maybe you trade. For the beginners, you can trade mostly on those pairs. The reason being is they're highly liquid and they are flexible. Trading sessions in the world, we have the Asian session. So this is when the markets open. The Asian session is from 1 a.m. to 9 a.m. During this time, most people are asleep worldwide, so most traders don't trade. The European sessions from 9 a.m. to 5 p.m. Most traders trade during this time. So if you notice, most of our signals that we give on WhatsApp, we normally place them on the European session, the European Open. That's when we conclude our analysis. From 10 a.m. to 5 p.m., you notice there's also high volatility during this session. And then we have the New York session, which is the 5 p.m. to 1 a.m. This is the closed session. Currency correlation. We have positively correlated currencies such as the Euro USD, GBP USD, AUD USD, NZD USD, Euro Yen. You'll usually notice that sometimes you're on a buy on GBP USD, and then maybe I check my analysis right, and when the AUD USD is showing a similar trend, then we'll also buy all the NZD USD. So just like that, the negatively, just like that, we have USD CAD and USD Swiss franc. And then some of the, let's look at the 8 most common currency symbols, which here we have 7. So when you go to the market and you see EUR, that means the euro, the USD, that is the US dollar, GBP, Great British Pound, JPY, we have Japanese yen, CHF, we have Swiss franc, we have AUD or AUD, Australian dollar, and then the NZD, which is the New Zealand dollar. So these pairs, they also have nicknames such as the AUD, which is the Auzi. We have Kiwi, yeah, such stuff. So I am not good with the nicknames, but sometimes you'll find a trader who uses the nicknames. So don't be confused. So get your facts right. We have the 4 kinds of Forex traders. So before you decide to trade Forex, you have to know which category you're going to fall into, because sometimes you'll go to a seminar, maybe you're asked what type of trader you are. So we have scalpers, we have day traders, we have swing traders, and position traders. Scalpers are basically those traders that get into the market, target between 5 to 10 pips per trade. The trade duration is between seconds to minutes, maybe 1 minute to 5 minutes. Day traders, they target between 20 to 40 pips per trade, with the trade duration within a day, and they trade on the charts on 15 minutes, 1 hour, 4 hours. Swing traders, they target 50 to 150 pips per trade, trade duration less than a week, or they trade on charts such as the 1 hour and the 4 hours. Position traders target between 500 to 1,000 pips per trade, with the trade duration between weeks to months. They trade on charts such as the daily and the weekly. What is tradable in the markets? So before you decide, we have Forex and we also have other stuff that are traded in the market. Most of you have asked me why we don't do the other tradables. So the reason is we are focusing majorly on Forex at the moment. But if you want maybe signals for cryptocurrency, stocks, indices, futures, or commodities, we can always work around that so that we can give it to you. So that's also okay. So currencies are the business of Forex trading, Euro USD, GBP USD. That's what we are basically looking at. Cryptocurrency is virtual or digital currencies that cannot be controlled by government or any central authority, e.g. Bitcoin. Most of you know, Bitcoin, which it are very high. We have Litecoin, we have Ethereum, and then we have stocks. We have indices, which is a combination, because stocks is the maybe shares for companies, trading shares for companies such as the Coca-Cola, Unilever, these big companies. Also, there are also stocks for small companies that maybe are growing. So indices is a combination of many companies in a specific country, e.g. the DAX index, which is in Germany, Dow Jones index, which is America, S&P 500, America too. And futures is basically making contract in the future, e.g. corn farmers to companies. Maybe a corn farmer has grown maybe like 100 acres and is prospecting that that the corn will do so well. So he goes to the company and is given money so that by the time the harvest gets to that, he's paid for that. So there's a way it's traded worldwide. Commodities, these are basically products, agricultural products and precious metals such as gold, silver, etc. Some of the Forex trading terminologies we have are the cross rate. Cross rate is the currency exchange rate between currencies which are not from the same country. E.g. in Kenya, $1 is 110 Kenya shillings. I believe €1 is ranging at 140. And then the exchange rate is the value of one currency expressed in another. E.g. the exchange rate of Euro USD, maybe you'll be told 1.3200. Leverage is the ability to gear your account into a position greater than your total account margin. Just like I told you, a leverage of 1 to 200 means that your broker is giving you a loan of $200 for every dollar you deposit. Margin is the deposit required to open or maintain a position. There's used margin and the free margin, which you'll notice when you download the MT4 when you're taking your trades. The bid price is the price at which the market will buy a certain currency from you. The ask price is the price at which the market will sell a certain currency from you. The spread is the difference between the bid and ask price. So in short, it's the buy price minus sell price. That's simple. So market trends, we have downtrend. Downtrend is a series of lower highs and lower lows. Uptrend is a series of higher highs and higher lows. And then in a consolidating trend, the market keeps on moving between two strong zones. So when we are on a downtrend, it's basically a sell. The market is doing a series of sells and retracements. Retracements is when the market is on a downtrend and then it tries to get back up and then it goes down again, gets back up and then goes down again. While the uptrend is a series of higher highs and higher lows, which means when you are on a buy, you'll notice there are sell activities in the market. They usually go down, go up again, go down for some short pips, go up again, go down. So it's usually good to chip into the retracements. Those are called retracements. When maybe you're on an uptrend and you see a sell activity, you wait for your confirmation and then you buy again. So in the next class, be very keen and be very eager to attend this class, because this is the part where you get to be great in your journey. So we'll show you how to do your analysis on uptrends, how to make the trend your friend. Just like you see, I said, always make the trend your friend. Never trade against the trend. If you want to be a profitable trader, you always have to understand the trend. So in the next class, will be very insightful. So what some of the bad days to trade, we have the Fridays, which are very unpredictable. We usually not trade on Fridays. So when we take a trade maybe on Thursday, we have to cover like a little bit so that we don't hold our trades up to Friday, because they're very unpredictable. A good day to trade if you want to lose all the profits you made during the rest of the week, which happens a lot. It has happened to us, it happened to me. That's why I hate trading on Fridays. There's also the NFP. which comes on Friday, on the first Friday of every month. So that's why the first week I usually don't trade. Maybe you'll still trade other Fridays, but the first Friday of every month, no. Sundays, I can only trade the NFP when I have my news right. Yeah. Sundays, there's very little movement on these days. Trade this day if you want to start off your week with negative pips. So Sunday midnight, that's when the trades open, and usually you notice they open with the market gap. So when we're doing the analysis in the next class, I'll show you how market gap is created. Holidays, banks are closed, which means very little movement on these days. Holidays are great to trade when you'll rather lose your money than take a day off and enjoy other finer things in life. So holidays such as the Christmas holiday, why should you sit in front of your computer waiting for them? There is usually no movement. In fact, on Christmas 2020, there was no movement at all. I remember I was on this trade, but there was no movement at all. So you always have to wait until the season is over. News reports, no one really knows where the price will go when a news report comes out. You could close a fortune trading during news releases if you don't know what you're doing. Price acts like a drunken monkey during these times and become unpredictable. So you notice when the UK released news that they had vaccinated like 10 million people, you're on a sell. But the spike that was on the buy, just because of the news that was released for the vaccine, wow, it was so great. Like I showed you on GBP USD, uh, just one candlestick gave us like how many? One candlestick gave us like 118 pips. This is what I'm talking about. This is where the news was released. I was watching Bloomberg by then, and I chipped into this trade at this point. So you can just tell how many pips. I'm still on a buy on this trade because on the longer term, so you can see I've already spiked like 167 pips. Up to this point, it was 115 pips. So you can only see the movement I'm talking about. So guys, I believe with this is what we have for the basics. We'll still do more videos. So feel free to contact us in case of anything so we can help. Or maybe you need us to maybe talk on something that maybe we skipped. Always feel free to talk to us and whenever. So you can always find these videos on YouTube. Just search Tradify FX with small letters and you will find us there. Watch our videos. Remember to subscribe and tell a friend to tell a friend. We have a lot of videos coming up, and we also have a website coming soon and an application for the signals. So whenever you registered for VIP signals, you'll always find a notification, whether you're at work. So we're going to make your work easier. Just focus on your 9-to-5 job. But when you have your phone next to you, we always have our notifications popping. So you can always take our trades whenever we give them. So don't panic, we got you guys covered. Share this course because it's free. I know there are a lot of guys outside there, family. Just give them the link to our YouTube so that they can watch them, and we'll really appreciate. Thank you so much. Be blessed. And we hope you find this so insightful. Thank you and bye.